with our webinar. And we're going to be talking today about the importance of broker relations in apartment syndication. I know that I've addressed this in the past, and I do have something special for you at the end that I think will be very, very helpful for you. Kind of a summary, but we'll get into that in a little bit. But broker relations is the largest part of the multifamily investing. If you don't have relationships with the brokers, then you will not have pipeline or deal flow. If you do not have pipeline or deal flow, then you will not have a business because you won't have anything to buy. And it really doesn't matter what size of asset you are purchasing, whether it's 350 units or it's 5 units. There most likely is going to be a broker involved, and you're going to have to build a relationship with them so they understand who you are, where you're coming from, and what you're trying to do. And so getting that started is very, very important. Oop, that is not what I wanted to send out yet. So I'm letting the cat out of the bag here. Get that up over on this other screen. So use my little outline here, and then I'm going to share that with you in a little bit. So I'm going to leave my other screen up here just so we can kind of go through the bullet points as we go through. And I know a lot of you always ask, are you going to share anything besides the Multifamily Investor Nation registration page? I do not, because I'm very simple. And quite frankly, my job is to purchase multifamily assets. And we do this as a benefit to you all. So I don't spend a lot of time on the slide presentations and everything, just for the sake of getting you the most content as possible without a lot of fluff and extra that you don't need. So who are the major brokers for multifamily real estate? This is important to understand, and it depends on where you are purchasing and what market you're in. Within each market, you're going to have brokers that are the top in that submarket. So if you're buying in Texas, and specifically, let's say you're buying in Houston, there are going to be brokers that are the top in the Houston submarket. If you go to Florida and Orlando, there's going to be a group there, and they may kind of run the show there. There's going to be multiple brokers, but you're going to need to know who the players are and who the top players are. And it's not really important that you only talk to the big players, because we have deals that, and sometimes you get better deals from the smaller players, the ones that are a little more hungry, or maybe their values aren't quite as strong as some of the bigger shops. But just to kind of list them out, you have Berkadia, you have Newmark, Cushman Wakefield, you have Colliers, and I'm going to forget some, so let me make sure I'm going through these. You have Berkadia, Newmark, Colliers, Cushman Wakefield, Walker Dunlap. You have IPA. You also have JBM. So those are some big. You have Capstone, and those are kind of your main brokers, pretty much across the U.S. Marcus Millichap is in there, but they kind of tie in a little bit with IPA. So we don't interact a lot with them, but those are the main ones. Probably our top ones that we interact with are going to be Newmark, Cushman Wakefield, Capstone. CBRE is another one I forgot to mention. They're a big firm. CBRE is one we deal with often. So you're going to want to go and it's as simple as going into the going to Google and saying, okay, who are the multifamily brokers in Houston or in Orlando or Tampa or Charlotte, and getting the list of those. But you can look underneath of those companies that I just listed. And you can also go on their website. You can find their listings. And then each company will have a team per kind of per region or area. Like you'll have the Sun Belt region for Cushman Wakefield has a Sun Belt region. And then you're going to have smaller groups within that region. So you're going to have a North Carolina group and a South Carolina group, or within Florida, you're going to have an Orlando group and a Jacksonville group, or Melbourne and Jacksonville, or whatever the case may be. They might cover a couple different cities, but in each one of those groups is going to have around 5 people or so, give or take. Some have 3, some have 2, some have multiple that you're going to need to know who they are and what their role is within that little shop. So you're going to want to find the state, the submarket, who that group, the company and who that group is in that submarket, and then begin contact with those brokers at that time. And then you can see on the page, you're going to see how to establish initial relationships with those brokers, how to build trust between yourself and the brokers, kind of like maintaining relationship, building relationship, maintaining it, and ways to maintain broker relations. So what I want to do is kind of go really down through the list of establishing the relationship. But before I do, let me go ahead and see if we have any questions. Hold on one second. Let me pull up my Q&A and chat. Yeah, I can type those out. We have a question about typing the companies out, and I'm sure I'm going to miss some. But I'm going to go ahead and do that. So I apologize for this little delay. And apologize for any spelling errors as I go through this. I'm putting these in the chat. Let's see. I think that's pretty much all the major players that I deal with. Now it's going to be a total different ball game when you get into the smaller unit, like your 10 units. Those are going to be your local, really just real estate brokers on the local level. They're not probably going to be tied in with a big firm. They may be, but it's not going to be the same type of setup as I described. That is, so that's going to take a little more effort if you're looking for, a 5-plex or a duplex or whatever the case may be. So that's going to be a lot more granular than what I'm talking about here. These ones on the big multifamily side, they're pretty easy. You can go onto their websites, type in multifamily, pick your city, and go from there. All right. I don't see any other questions now, so that's good. We can go ahead and jump into the major content of it. All right. So what I'm going to go over with you is actually from brokers themselves. So this is not just me saying this. This is, I went out to the brokers and I asked them questions. I know I've gone over some of this before, but I think it's always helpful. And some of you weren't part of that webinar in the past, and I think it's a good reminder. And I'm also going to send you a summary of what I'm talking about here. So you want to track, so we're going to talk about establishing the relationship. You want to track the market and inquire about active listings, ask them about pricing guidance, closed sales pricing. So, some sales comps, and ask for a quick elevator pitch on the deal. So basically, we always send out an email initially. If you're, interested in a deal and you haven't met a broker yet, but we send out an email saying, hey, we're looking at this deal, and can you tell us what the guidance is, when the call for offers is, and kind of give me a rundown. They'll tell you the cap rate based, tax adjusted cap rate based on whatever T12, and give you the elevator pitch on it and some things to look out for. Now, just remember that they're selling you something, but that's the initial one. So you want to track the market. Your initial is going to be to go to those websites, find out who the brokers are, send out an introductory email, get on their pipeline list. So you'll start receiving deals automatically. They're not real picky about who they send those out to. So it's easy to do that. And then, then you can go ahead and start tracking this and doing what I'm saying here. So be sure to be active in responding to deals so that your name is coming up. I know that's very, very important when it comes to brokers. And I've learned this more even on the disposition side as we've sold assets, how important relationships are in winning deals. Because as we are selling deals, we're asking the brokers, how well do you know this group? Have you closed with them before? So those are all very important things. They have to kind of know you. For off-market deals, this is going to kind of come later. You need to, if they give you an off-market deal, though, let's say you've reached out and you're asking about anything in the pipeline. Let's say you're looking in Nashville and you talk to the broker there, and they, say, "Oh yeah, we have a deal. We haven't really listed this, but if you're interested, you can take a look at this." If it's off-market, it's not listed, make sure that you have the offer back within 48 hours. That just helps them. They're trying to build a basis of whether they can sell it preemptively or whether they need to go full market with it. So the sooner they can do that, the better. They're trying to get the listing. In other words, a lot of times they don't have it locked down all the way, but if they can get a good offer in, they may be able to sell it sooner. So they're one to get that in quickly. And other brokers are also vying for that property as well, turning in brokers' opinion of value on that property. And so it's important to get that in quickly. So that's a good point there, and establishing the relationship with them. Also, a good thing to do is sending in pad offers on deals where if the broker doesn't have as many offers as they would like, which typically isn't the case right now, but it has been the case historically. And sometimes, we are seeing deals kind of pull back from initial guidance now. I think brokers got a little bit overly aggressive in Q4 with their pricing. And so you're seeing some pullback on that now. And so if they put it out and maybe you can't achieve the top number, right? You can't get to where you can actually win the deal, or you don't have room, then you can call the broker and say, "Hey, I don't think we can get to where it's going to run to, but do you have enough offers? Do you need me to go ahead and submit an LOI? And what price do you need me to submit that at to help you provide a market survey?" And just, he'll tell you, "Yeah, that'd be very helpful." And this is from the brokers. They are saying this to me, and we do this often. We actually did that last week on a deal. And to be honest with you, and that deal actually pulled back from pricing, and we ended up being actually in the running for it at the pad offer, even though we declined at that point because we really couldn't move at all. So that's a good practice. Actively participate in marketing deals, even if it doesn't fully match your criteria, to establish rapport with brokers through a marketing effort, especially in a market you want to penetrate. If you're trying to get into a market and maybe you have a very specific criteria, you can go ahead and ask questions about a deal that may not quite fit or may not be the best location, but you're still getting your name out there. They're still seeing you come across their desk, and you're not wasting their time really. You're just asking the basic questions, if you can put it into underwriting, but they know you're active in the market and they're paying attention to who's active in the market. This is not a huge world that we deal in multifamily, so it's very important to be active. And so they kind of constantly are seeing your name come across. Another point is to build trust by asking smart underwriting questions to prove you understand the math. So once you've gotten the guidance on the pricing and you've put it into your model and you've done your pro forma and your rent analysis and everything, you can ask questions. Now, what are you underwriting for your tax year one? We're seeing that's going to reassess in year 3 because they do a 5-year reassessment in this county, and we're in year 2. Questions like that. Or you said it was a low 4 cap rate, tax adjusted cap rate. We're not really coming up with that. Do you have the underwriting section where you're showing that? Just asking those questions, it helps them to understand that you know what you're talking about when you're analyzing the deal. And then come tour and articulate how you get deals and capitalize and improve, or how you're capitalized and how they get approved. That's going to be one of the number one questions that you get asked is, where's your capital coming from? So whether that's syndication or joint venture, private equity, whatever the case may be, institutional equity, whatever the case may be, when you tour, you can kind of articulate that. And then also build trust. This is all under the build trust. Do what you say you're going to do. Don't ever waver. So if you get into the deal, be sure that you don't, go back on it. If you say, "Yeah, we can," and put an offer, and then you get awarded the deal and say, "Well, we didn't think about this, and we miscalculated the taxes, and so we can't actually offer that price." That's a surefire way to end your multifamily career quickly. So be conservative enough in your underwriting to overcome any variables that you will encounter when you get a deal under contract. So building trust by asking smart underwriting questions, by proving you understand the math, come to and articulate how you get deals capitalized and approved, and do what you say you're going to do. And another point is, do not ask to get on a call to introduce yourself because you have interest in seeking off-market listings. Hey, we want to buy off-market deals from you. Like you're somebody special. And the broker that gave me this tip said, join the crowd. Everybody wants off-market deals, and so tour instead of schedule a meeting. Explain who you are on the tour, and then offer on the property with your best foot forward. So you can meet with the broker for coffee. We did that when we got started, but they are busy, and if they don't know who you are, you may not get a lot of traction with them. I'm not saying don't do that, because we did that when we got started, but the broker's feedback is to meet them on a tour. Go ahead and get the call for offers, get the guidance on pricing, underwrite the deal, understand the deal, go meet the broker, put your best foot forward, come, very professionally dressed, and really ask logical questions, and that will help you. And I think it'll help you a lot more than maybe sitting down for coffee. One thing I'm going to add, this is not in here, that we do also when we offer now on LOIs, is we have a kind of a company summary that we put with our offers, so that the seller can understand who we are. And if we don't know the broker, at this point, we kind of know all the brokers and they know who we are. So we don't have to deal with this as much. We're more targeting the seller. But when you get started, if you can have like a summary sheet, basically that says who you are and what what your portfolio is, or what your experience level is. So if you've been on the GP side in another deal, maybe you weren't the main sponsor, but you were on the GP side, you can kind of put those projects in there and who your team is. Make yourself look as big and as professional as possible. That will help go a long way. Another point, close your first deal on time without a retrade or any delay, and move as quickly as possible through the PSA. Our average PSA, if it wasn't for the sellers, we would be through a PSA in 5 days. We do PSA turns. That's, you turn in a PSA, or somebody gives you a PSA draft, you redline it and turn it back in. That's a turn. And when they turn it back to you, that's another turn. But the initial turn, we can do that within the same day typically. So make sure your team is very professional and very responsive, because that can hurt the deal. So if you have an attorney that is not very good at getting emails back immediately, maybe look for a different attorney, because it really is going to help you. So close your first deal on time without a retrade. And so that comes down to underwriting, making sure you have enough reserves built into the underwriting that you can overcome. You will find discrepancies or things, but unless it's like a building sinking into the ground or falling into a sinkhole, do your best to not retrade the deal. Obviously there's going to be a line there that you're going to have to decide what that is. But do your best to just be as smooth as possible in closing the deal. Another point is be understanding as both a buyer and a seller. So understand that, there's a person on the other end of this, and the broker's in the middle, and you will one day be a seller, and try to think from that perspective. Try to be respectful. And as a seller, same thing, try to be respectful of buyers. And you've been in that position, and you hate when there's a best and final round, and put your best foot forward and sharpen your pencil. But at the same time, as you, the seller, you understand that you're trying to get the most for your property. So just kind of be aware that there are two parties. You both have a, not just a position, but you have something you're trying to achieve, and understand what that is from the seller or the buyer. And that will help you, and understand that the broker is the middleman. They don't make the final decision most of the time. They do have an influence in it, but with some groups, I've seen deals go all the way through the process, and the last minute, the seller goes around the broker and awards it to somebody they know, against the advice of the broker. And just remember that it wasn't necessarily the broker's fault. And that's another point in here is and we'll get into that with maintain the relationship, but don't shoot the messenger, in other words. Initial relationships are best established by coming to tour or spending time underwriting one of the listings. That was kind of part of the other one about don't ask to get on a call to introduce yourself. Provide feedback on what types of investment opportunities you are targeting, an overview of you and your company. And we kind of already went over that. So now I'm going to go into maintaining the relationships. But before I do that, I want to just check the Q&A. We have a question about what is a tour. A tour is when you go to look at a property. So just like, if you're looking at a house, you're going to meet the real estate agent and go look at the house. And so you're going to do the same thing with a multifamily property. But let me go down through here. Let me just read through these questions real quick. All right, so the question that I have here is, do you recommend downloading the package for every deal in a market, even if you have no interest in that specific deal? If so, do you still communicate with the brokers after your original email on the deal and tell them you're not interested, or just forget about it? So I wouldn't download every deal. It has to kind of fit in your purview or kind of what you're looking for or your criteria. Because, if I'm looking for Class A pre-stabilized deals and a 1975 C-class comes across I'm not going to load that deal. But if a B plus asset is 2000, vintage, 2005 vintage comes across, okay, that's pretty close. I can make that work, and it's in my, in my submarket. I can touch on that. But if you're all over the place, like 1975 C-class, 2021, metro high rise, and you're looking at those, the broker's not going to take you seriously because you're too broad. So, you want to stay kind of within a scope. And the only benefit to downloading as many deals as possible, but this depends on your software, is market data. So we download as many deals as possible that fit our criteria. So even if it doesn't work, we still download it, we underwrite it, we say it doesn't work. We don't provide feedback on every single deal. If the broker reaches back out to us and asks us if we're going to bid on it, we do say that we are not. But otherwise, most of the time we just pass on those and don't really move forward. But great question there. How many deals has passiveinvesting.com retraded due to a due diligence poor result? Due to due diligence poor result is 0. We have retraded on a deal that we put under contract. The rate as COVID came out in March of last year. And so we had to, because the rates went crazy, but not because of anything we found in due diligence. So we have enough, and we've looked at the property and we know what we're getting into when we get the property. Now, have we found things on the property? Yes. Did we go back to them and ask them to fix them? Yes. Do they always fix them? No. So you can get into, if you're arguing over $15,000 on a, $40 million deal, you're wasting everybody's time and your underwriting is too tight. So that is my kind of advice there. So we try not to ever. We're working on a deal right now. We just found out that there's an issue with the balconies, and it's a new construction deal. So we're going to go back to them and say, hey, it's still under warranty. Can you just have your contractor fix this and get it taken care of? So it's not, that's a pretty substantial fine there. So that's the first time we've ever had anything where we've really gone back and said, hey, can you fix this? And they won't come out of pocket for it. But because it is a new construction deal, we did go back on that. But great question there as well. Okay, when starting out, should I go tour deals, even if I do not plan on putting in an offer just to create a relationship? And if I do tour, should I feel obligated to put in a pad offer to help the broker, but say I am not interested? I think there's a fine line there. I think if you're just going and looking at deals, well, there's two factors here. Let me back up. There's your time. Do you have time to go tour deals that you have no interest in? If it's like a first time and it's kind of fits in your criteria and you can go ahead and meet a broker for the first time and take a look at the property, then yeah, but I would tend to go at least towards deals that you intend to put an offer on. You may not end up being able to win the deal, but if you're not able to even, get close or anything, you're kind of wasting your time. But I don't think it's a terrible thing if you want to just meet the broker. But if you do that too much, you're going to lose credibility. So I would tend to lean towards more deals that you can put an offer in on, but you can kind of step outside a little bit and expand your criteria a little bit to allow for that. So, like for instance, if they say the guidance is 260,000 per door, and you can, pulling all the levers in your underwriting, you can get to 260,000 per door. Well, that deal's not going to sell for 260,000 per door. At this current market, it's probably going to sell for 280 to 300 a door once it's all said and done, the way the market's moving inside of the process. So you're not going to win that deal, but doesn't mean you can't offer a guidance, and that gets you in the door, gets you an LOI out there, get your name in there. So you can do that even though you're probably not going to win the deal. So that's a good way, especially when you're getting started. But just to tour deals that you cannot and absolutely are not going to offer on, I just feel is a poor use of your time more than anything. All right. And let me check here. Great questions. Yes, you will get the broker relationship checklist. We're going to send that out. So I'll go ahead and let you be aware of that. Downloading deals. We've used, what software do we use to download deals or our pipeline? We use Monday right now, but we are switching to DealPath. DealPath ties into our actual underwriting and gives us metrics on a dashboard. And also we can tie in an API from RealPage so we can track underwriting and our pro formas versus actuals on the properties and see where we need to adjust our underwriting and see where we're most accurate. So if we're off on taxes, what went wrong there? If we're off on insurance, why? If our payroll is heavier than what we underwrote, what's the deal? Do we need to change our underwriting, or was there some problem there? So that's why we're switching, so we can kind of get some real-time data there. But so Monday is a great one if you don't have a huge pipeline, but we've underwritten over 500 deals this year with a less than 2% uptake rate or purchase rate of those. And so it was getting a little bit too big for Monday. So we're switching to DealPath. All right, let's see. All right. All right, I'm going to jump back to my sheet there, and then I'm going to kind of share this as well. Maintaining the relationship. Be honest and don't promise anything you can't deliver. Okay, so if you're going to tour a property that you probably can't bid on, just say, hey, I don't know if we can get as aggressive as you want us to get, but we want to get out and meet you, and we want to get a relationship going. So it may not be on this deal, but maybe on the next deal. Don't come in there and say, oh yeah, we're going to do this deal. We're the biggest and baddest shop in town, and then it's crickets from you, and they don't hear anything. You're going to lose credibility. So, and then don't tie something up if you are not confident in your ability to capitalize and close the transaction. So, get real aggressive and you get awarded the deal, and especially your first deal. If you get awarded that first deal, I'm telling you, better, do everything on earth and heaven to get that deal closed. Because if you don't, it's going to be very detrimental, because brokers talk to each other, sellers talk to each other. We had a deal we were selling, and there was a group that we hadn't heard from, and so I called other brokers of, hey, have you ever heard of this group? Have you dealt with them? What was it like? And we've had other groups that have offered, and they had a bad reputation, and so your reputation is everything in this industry, as it is in any industry or in life in general. So protect that at all costs. Try to be as organized as possible. Again, this is on maintaining. Try to be as organized as possible so you can demonstrate that you are credible and qualified to pursue and close the asset you are pursuing. So that's a little tongue twister there, but make sure that you are very organized and very professional, and that you can execute, basically, is the idea. Okay, and then make an effort to keep an active and open dialogue. If you share useful market intel you are hearing or getting on your end, they will typically feel more comfortable and inclined to do the same. So I talk to brokers all the time. Hey, I heard so-and-so was selling. Oh yeah, I think it's going for this, or what did that deal end up trading for over there? And hey, we were talking to this broker, and I think, this one traded at this, just talking about what's going on in the industry. Obviously you're under confidentiality agreement, so you have to be careful there. So you don't want to ever breach that, but within the confines of that, you can discuss the market and where things are, and kind of who the sellers are, and who the owners are, and who what's going on. It's very, very important, and it'll help you understand who the players are, and it will, like I said, it will make the brokers feel more comfortable about sharing information with you, and that can be very, very helpful. I'm telling you right now, because we have a deal that we have under contract right now, and that was strictly due to communication on a multiple broker front to get this deal. It was off market, get it done. Be efficient and try to provide feedback on pricing, interest level as efficiently and transparently as possible. So, if you are able, you can say, hey, thanks for the feedback. I got your guidance. We put it on underwriting. We're probably not going to be competitive on this. Let me know, how it shakes out in the end. And we can only get to, say it's $260 a door. We can only get to $240 a door. I know that's not going to get it done for you, but, just want to let you know kind of where we went down. And you can also give them feedback. It's like, and the reason is because, we're underwriting a 75% LTC loan to cost. And we're underwriting a 3.75 interest rate based on bridge debt quotes. And they may come back and say, hey, well, our debt team is underwriting an 80% LTC and a 3 or 2.8 interest rate on this based on what they have in the market. And so maybe you're missing the mark there. Or they say, oh, I got you, understood, or whatever the case may be. So provide the feedback, let them know. It doesn't have to be a big, long, drawn out thing. Usually when I send an email that says I'm not going to pursue a deal, if they're asking me, say, hey, are you going to bid on this? No, and this is the reason why. This is where we can get to. I just don't think we're going to be able to get as competitive as you need us to be, but let me know if anything changes. So at the end of the day, the brokerage is a job and money talks. So it's always a help to reward brokers with sales opportunities, and in some instances, buyer brokerage fees if they bring you into off-market transactions. So we have done this where a deal was off market, they went to the seller, and we paid the brokerage fee to the broker, even though we were the buyer. That's unusual at this level, but it has happened. And so you want to make sure that everybody's happy. And we're like, yeah, great, you brought us the deal. You came to us first instead of going to another group, and we were able to get this deal because of you. We appreciate that. So just be aware of that. And same thing on the selling side. They're trying to make money. So, I try not to nickel and dime too much on the brokerage fees. They're trying to make a living within reason. So there's different ways that they charge, whether it's a flat fee or there's an upside. In other words, they're going to give you 3 prices that they can sell your property at, kind of a low, middle and high price. And then they'll start their upside from the middle price. So they exceed. So it'll be like 50 basis on the sale price. And then after that's 5% on the upside from the middle to the high, or something along those lines. But I try not to nickel and dime too much, but it is a negotiation. So, I wouldn't get a reputation for just accepting whatever fees they send your way. Find out mutual interests with the brokers and go have some fun. So if they like to golf or whatever the case may be, they're a foodie and they like good restaurants, or, whatever it is, they like fishing, or, whatever. We've been on fishing trips. We've been on golf trips, all kinds of things. So, they ask about the families, and know who they are and how many kids they have, and, what's going on, where they live, and try to make it a little more personal. I think that will help you. Maintain relationships by letting a team or contact know you're coming to town and are available for coffee, lunch, dinner, etc. So, a lot of these, maybe you toured a deal, maybe you've closed the deal, whatever the case may be. If you're in town in that submarket for any reason, just shoot out an email. Hey, I'm going to be in town. Let me know if you're available. We can grab some coffee or dinner or lunch or something. And they may be busy, maybe not, but just that effort, I think, goes a long way to help build the relationship. And they're lets them know you're thinking about them, makes them feel important, and it's a good way to maintain that relationship. Include brokers on your email marketing. So deals that you have coming out, they're going to see that you're buying from other brokers. They're going to see that you're selling, or whatever the case may be. You want it out in front of them. You want them to see that you're moving and shaking. And we have brokers that invest in our deals, and that's a great thing. And you want that, especially if they're selling you a good deal. But I will tell you that I have a lot of brokers that say, "Oh man, if I was, I would invest in this deal." And then you win the deal. It's like, "Hey, you're going to invest?" And like, "Well, I'll probably get you on the next one." So you get that a lot. It's okay. They are selling you something. Just understand that. And then again, I went over this, but don't shoot the messenger. Take the news that you lost the deal like a grown-up. And many groups do not do this. So, you've been through 3 rounds of offers, and you're underwriting, and you're calling and checking debt quotes, and you're calling, checking insurance quotes, and calling the county and verifying taxes. And you've toured the property, and you've checked the comps, and you've done all this work, hours and hours of work, phone calls and emails and everything. And you're down, and you're down to the end, and you've put your last bid in, and you didn't win the deal. And I've seen people throw temper tantrums and everything else, and it's just not smart. It's just not the long game. Play the long game. You're going to have another deal with that broker. Guaranteed. It doesn't even matter if they were underhanded in the way they did it. Maybe, they were, back channeling with another group, and they were using you as a stalking horse to raise the price. It's irritating. Yes. Keep it to yourself. And just be an adult. That's all I can say there. And then last but not least, always celebrate a closing. So when you close, I'm actually doing this tonight. We're going down and meeting with some brokers. We're going to have dinner with the whole team, on their team and our team. We're going to talk about, what we have going on, that deal that we closed. We're going to talk about future deals, some deals that we're working on, and see if we can, get a better relationship there. So be sure to send a thank you note, or, send a gift, or because a lot of times you can't always go out to dinner, but be sure to try to do that. I think it's very, very important. And again, these are from the brokers themselves. So you're going to get this document, as I said. Let me just kind of show you what it looks like here. Oops, sorry. I had to redo it there. All right, tips for multifamily brokers. So you'll receive this. You'll receive the recording of this webinar within 24 hours, and this PDF will be attached to that email. So you'll get that. And this is we compiled this together. I say we, Melissa and Misty and the team over there worked on this for me and got this put together. So they do a great job. But this was compiled from actual feedback from brokers. So I sent out emails to all brokers, say, "Hey, give me what you say is broker relationships." And then I want to share that with people. So that is straight from the horse's mouth, if you will. So, all right, let's go to Q&A. And we got a few minutes left. So let's go ahead and see what we have here. Find where I left off here. Okay, during a deal you are pursuing, do you primarily communicate through email? How often should I be getting on the phone with them? It depends on how many times you talk to them. I think initially, start with an email, kind of work up to it. You're going to have to, let me back up. I'm sorry about that. So you've already been put on the email list here, and you're already receiving deals if you're communicating about a deal via email. So the initial contact is probably going to be via phone call. If you can't get on the phone with them, then email. But once you have deal flow, communicating via email is acceptable. Hey, I saw this deal. Usually when I receive the deal email, I will forward that email to the broker and say, "Hey, interested in this deal, just wondering what the guidance was or what you're targeting, and then what the call for offers is." And they're going to be guiding you at that middle price. Remember I said there's 3 prices, the low, medium, and high. If you as a seller are shown 3 prices, Are you going to go be expecting the low one? No, you want the high one. Automatically, your brain's going to the high one. So they're guiding you at the middle one, expecting to get to the high price or higher. So understand that when you get the guidance, you're going to have to move off of that. Don't underwrite hard to that number, because you won't win the deal ever if you do that. So, but initial, email them, ask them what's going on. If you don't get a response, follow up with a phone call. Okay, what amount of competition is out there in A and B class space, and do you feel it has increased in the past few months? Do you recommend staying away from C class until market cap rates change? All right, so that's a big question. So C class cap rates have compressed lower than A and B class. So value add, I'll say just C class, but value add, B class, and C class are low caps. Like value add right now is like mid threes, and I'm talking pretty much nationally. Your year one, once you stabilize, or they're saying is a 5 cap. Of course, remember it's coming from the broker, so the rental premium is way probably bigger than you can probably achieve, and the budget is probably lower than it's actually going to cost you. So that cap rate can be a little deceiving. So that's why we like the A and the B class. The competition is incredible in that space, and when it's a very off-market game right now. It's a very relationship-based game. We're talking to people that are breaking ground on stuff, seeing if looking at forward sales, definitely doing market research in areas and not going just after marketed deals, because quite frankly the price per door. We bought a property in the Florida market around $257 a door just this year, just a few months ago. There was a property being built right across the street, and now that property right across the street selling for in the low 300s per door, and it's pretty much the same property. So the prices have gone way through the roof, and it's just competition. You have a lot of people trying to place capital before the end of the year. So you have a lot of 1031 groups that are trying to put their money into place. A lot of people are freaking out about tax law changes and the implications there. So you have people kind of scrambling to put money into the pot, which has caused cap rate compression. But one good thing that I've seen is the capital markets, or the debt market, has softened a bit. And so you've seen it expand. So your rates have expanded a bit. The treasury has gone up. The over LIBOR has increased a little bit, or not too much, but has some. But the treasury's definitely gone up. Your LTV or LTC has decreased because of supply or cap rate compression. So all of those have affected how much people can pay for the properties. So if you can get 80% LTC, loan to cost, and a 2.8 rate, then you can pay more than if you're getting a 70% LTV and a 3.75 rate, just because basic math. So it is affecting how much people can pay. But you do have all cash buyers out there. They are putting debt on it after the fact, but they can be a little bit more hard on the negotiations because they're not up against the clock, so they can try to get better terms. I think that the debt market will harden back up in Q1, but right now I think it's a little bit of deal fatigue in Q4. So there's a lot of competition out there, but great question. Okay, is it okay to just tell the broker this does not meet my return metrics, or is more detail preferred? They're going to ask you for more detail because they want to find out what is going to work for you. And they'll say, well, what do you mean, it doesn't meet your metrics? Well, my IRR, I usually try to target, between 10 to 15 or whatever the case may be, 7 cash on cash, whatever. They're going to want to know what your metrics are. And they say, well, we're underwriting, a 15 IRR and 8 cash on cash. Of course, remember that their underwriting is a little more optimistic than ours is. And if you're a syndicator, their underwriting does not include any of the fees. So you have acquisition fees and loan guarantor fees and different things associated with it that their underwriting does not have, which will affect the IRR and cash on cash. But they're going to want a little bit more detail on that. So if you can give it to them, it will be helpful for you in the long run. All right, let's see. more depth on deal path. That'll probably be another session because that we are just now doing that, and we have our implementation meeting on Friday. So we're very early on in that process, but basically it's, more real-time data. Whereas Monday, if I want to see a deal, I can see how much it is. I can see how many doors, I can see the vintage, I can see the map, I can get a link to CoStar, all the rest of it, but I can't see real-time data. What's my IRR? What's my cash on cash? And everything right there. So I can easily scan deals. I have to download the underwriting, open it up, look at it, play with it, upload the new version. And so it takes time if you're going down through 50 deals. So being able to just see, it's looking at your underwriting, scrubbing the data and putting it up on the dashboard and say, this is the IRR, this is the cash and cash for this deal. Oh, this deal is terrible. Let's move on. And instead of having to take the extra time. I'm trying to keep, there's some other questions here. I'm trying to keep it pretty close to broker relations because we are down up against the clock. Right. Okay. This is a question about best source for market data. And I say this all the time, and I know people are like, what if you don't have access to CoStar? But we use CoStar. And that is a very robust software. I mean, there's maps with overlays to tell you about the demographics and what areas have the highest income levels and sales comps, and who owns the property, who manages the property, what broker sold the property. So if you're looking off market, you say, well, who sold it? Talk to them, call them up, say, hey, do you think they'll be interested in selling? So there's tons of data on CoStar, and it's invaluable information, but it is expensive. And so if you don't have it, go reach out to your broker and ask them if they have the CoStar report for the property or whatever they use. There's some other ones, but we use CoStar. But ask the broker, because if you're not a bigger player, the price tag of CoStar is going to be hard to swallow. And whose underwriting software do we use? We don't use anyone's software. We have our own model, and it's constantly being morphed and changed. But it is, we do use Red IQ, which helps input the data. We do use that software to cut back on the manual input of numbers, and it'll kick out outliers and different things like that. So a lot of help there. So, all right, that is all the questions that I see. Actually, is it wise? Okay. Is it wise to ask brokers about the underwriting and questions about any unusual numbers, or run it by a local third-party property manager? Definitely be involved with your property management company. Already identify who you want to work with in the market and work with them, because you can do your pro forma and your rent analysis, but they need to agree with it or provide one that's close to yours, because otherwise you could be overly optimistic and they could, or they could undershoot the mark and you didn't win the deal because they were too conservative. But you don't want to set them up for failure. So work with the third party manager, and then definitely ask the questions about the underwriting and the financials. Like, hey, we're trying to find the cable income, but I don't see a line item for that. Is that built into the rents, or are you charging it separate? Because you said there wasn't a cable contract. So ask those questions. It's going to show your intelligence on the deal. It's going to be very, very helpful in the long run. So don't be afraid to ask questions. The best way to be is you with people. Be direct and be candid. Be personable. Be respectful, but be clear. Don't be afraid to ask questions. And don't be afraid to be humble. I don't know everything. Neither do you. Neither does the broker, and neither does anybody else. So it's okay. Ask the question, and you'll know the answer after that. So that's the best way. Okay, this is a great question. It seems like raising money is a bad word. When brokers ask how I am raising my funds, can I just say I have high net worth individuals? We've worked very hard on how we communicate that. Syndication for some brokers is kind of a weird word. They don't understand it, or they've had a bad experience with it. So you could say, we're a private equity firm that has a pool of high net worth individuals, and you're saying it's syndication, but you're not using the word syndication. So there are ways to phrase it, but think through that verbiage and what makes sense to them. If it's just a couple of high net worth individuals and they're going to be there is no GPLP and it's just a JV, then you say, oh, it's a joint venture with, or maybe you have institutional equity, whatever the case may be. With the brokers, I'm not as worried about the verbiage as I am with the sellers when we do the buyer interview call, because you do that. And when you're getting the best and final round, they want to hear how you operate and if you can close the deal. So that is more important at that stage, I believe. So, all right, great questions. We have 3 minutes left, so I'm going to go ahead and wrap it up. Thank you, everybody. I know that was a lot, but you will receive that checklist that I showed you, and I hope that's helpful for you. Use it and try to get to know the brokers, get to know how they think and act and what their interests are, and I think you'll be successful. And then coming up next week for our webinar, we have how to make the leap from single family to multifamily investing. So I skipped a couple questions in here that directly dealt with that, going from real estate to commercial and how you should do that. And I had somebody else that was getting their foot in the door as a real estate agent. So I think this will be more down the lines of where you were asking those questions. So that's why I purposely bypassed them. So I don't think I wasn't paying attention. So Danny's going to be handling that for you, and that's going to be next week. So be sure to join us next week for the weekly webinar. And thank you so much for being here today, and wish you all great success in your real estate journeys. We'll see you next time.